Only zero point 0.1 Bitcoin is enough to change your entire life. You may have heard of the zero point 0.1 Bitcoin thing before. It's an idea that's been around for a while and it's getting more attention lately. Today, we will explore the history and future of Bitcoin's price and why owning 0.1 Bitcoin could be a big deal. Stick around because you are about to discover a secret that could be a gold mine. The principle of scarcity. Let's start with the basics. At the heart of Bitcoin's value is its scarcity. You might have heard this already, but think of Bitcoin as gold. There's only ever going to be 21 million Bitcoins. That's it. Unlike traditional currencies, which banks can print endlessly, Bitcoin's cap is set in digital stone. This scarcity mirrors precious metals and starkly contrasts the inflation-prone fiat currencies controlled by governments. The 0.1 Bitcoin strategy. Now, let's talk about owning 0.1 Bitcoin. Why is this fraction so significant? Owning 0.1 Bitcoin is more than just holding a piece of digital currency. It's like having a stake in a financial revolution. The value of this fraction has historically outperformed many traditional investments. Big players like Michael Saylor and companies like MicroStrategy and BlackRock are piling into Bitcoin, not just for fun, but because they see its potential. This is something many will only realize when it might be too late. Bitcoin's price history. In 2008, Bitcoin started as an idea in a white paper by Satoshi Nakamoto. Fast forward to 2010, and we see the first commercial transaction: 10,000 Bitcoins for 2 pizzas. Fast, but it was in 2013 that Bitcoin really hit the headlines. The year 2013 marked the first significant price rally, with Bitcoin surging from around $10 to over $1,000 by the end of the year. Increased media coverage drove waves of new users looking to capitalize on this exponentially appreciating asset class. However, a major hack of the Mt. Gox exchange triggered a price crash in 2014. Prolonged bull run. After a period of relative stability around $200 to $300, Bitcoin entered a prolonged bull run starting in early 2017. By the end of the year, the price exceeded $19,000, driven by growing mainstream adoption and the emergence of crypto exchanges like Coinbase. However, 2018 saw prices plummet below $4,000 in an extended crypto winter. In late 2020, Bitcoin began a dramatic rally as institutional investors like MicroStrategy and Square began paying attention to the asset. Major payment platforms like PayPal also started supporting crypto transactions. In early 2021, Tesla announced a $1.5 billion Bitcoin purchase, sending the price past $50,000. By November 2021, Bitcoin hit an all-time high of around $69,000 before plummeting once again. Do we have a crystal ball? What's in store for Bitcoin's future? Can it maintain this crazy growth, or will the bubble eventually pop? Experts' opinions vary. First up, we have the classic supply and demand dynamic. Only so many Bitcoins can exist, and the supply cap is set at 21 million. As more people want to buy in and start using it, the demand increases, pushing the price. It's economics 101. Here's where it gets a little wonky. Bitcoin's supply is further limited by the mining difficulty and the halving events every 4 years. It keeps getting harder for miners to generate new coins, and their rewards are chopped in half at each halving. The next halving is 2024, so supply tightens over time. Next is market adoption. This is key. The more real-world traction Bitcoin gains as an actual exchangeable currency or investment asset, the more demand grows, fueling price jumps. Media hype feeds into this too. Of course, regulation is huge. If governments give crypto the green light with clear guidelines, it removes uncertainty and excites big institutional money. But if regulators clamp down, it could pop the bubble quickly. Moreover, major world events often affect Bitcoin's value. When economies tank or countries go to war, people see it as a haven and pile in. Dollar boycott movement. With all the drama happening geopolitically, could Bitcoin actually become the next big global reserve currency? Some pretty crazy stuff is going down that's fueling this idea. First off, we have a growing number of countries basically boycotting the US dollar lately. They're sick of America's huge debts and trade deficits, so they've decided they don't want to play with our dollars anymore. Russia, China, Saudi Arabia, they've all been dumping dollars quick and doing way more trade deals in their own currencies instead. Oh, and stockpiling up on gold too, just in case. If this dollar boycott movement catches on more globally, it could really mess up the dollar's reserve status. Now, all these dollar-hating countries have also started teaming up in new anti-dollar alliances. China and Russia have been getting super tight, cutting deals and reducing dependence on the greenback. Saudi Arabia's also joined their club, cooperating militarily and economically. So, the dollar's dominance is facing some real coordinated threats. Enter Bitcoin, stage left. The key with Bitcoin is it's decentralized. No government controls it. It runs on technology, not political whims. This neutrality could make it very appealing as a new reserve asset that's a middle finger to the drama between governments. Also, its supply cap theoretically protects against inflation. Hell, Bitcoin checks a lot of boxes. Global economic uncertainty. Again, there's the fact that the world is facing major economic uncertainty. Crazy inflation, potential debt crises, looming recessions, you name it. When traditional finance starts looking shaky, people start looking for safe haven assets. Right now, many are seeing Bitcoin as the hot new digital gold since it surged despite the economic craziness. Of course, Bitcoin isn't quite ready to be a full reserve currency yet. It's still pretty volatile and risky compared to assets like gold. But it's got brand recognition and accessibility going for it. So, if it matures and overcomes some challenges, don't be shocked if Bitcoin gains more ground as the neutral currency of choice when countries stop trusting each other's money and the printer goes The next halving. Alright, let's talk about Bitcoin halving events and what it could mean for the market. Firstly, a quick explainer for the newbies. The halving is when the reward miners get for generating new Bitcoins gets slashed in half. It happens every 4 years by design to control supply. Historically, we've seen major bull runs in price over the next year or so after each halving. Like after 2012's halving, Bitcoin's price went parabolic, skyrocketing over 9,000%. 2016 and 2020 also saw massive 2x and 6x runs respectively after their halvings. But check this out. Each pump seems smaller than the last. This has some folks arguing the halvings are losing their oomph when it comes to popping the price. The psychology makes sense. The first couple of halvings were huge because they dropped the new supply drastically early. Now, at 18 million coins, slicing by half doesn't shock the market as much. Our next halvings come up in 2024, 2028, and 2032. It's hard to predict how significant the impact will be, but many industry experts think we'll still see significant bull runs, just maybe not as epic as the early days. Of course, past performance doesn't guarantee future results, especially in such a speculative market. But the halving is crypto's version of a stock split, essentially engineering scarcity. So as long as demand keeps growing, it should do wonders for pumping up the USD exchange rate. Will we see six-figure Bitcoins after the next halvings? That may be stretching it. But based on past patterns, it's a solid bet they'll provide a healthy rocket fuel injection to keep the crypto party going well into the 2030s. Smart money and Bitcoin. The big players in the market who know what they're doing and have a lot of experience know the big deal about Bitcoin. The institutions, hedge funds, and other professionals look at the big picture and the long-term trends. Well, guess what? More and more of these smart money investors are buying Bitcoin, making it more respectable as a type of asset. Why are they doing that? Well, there are several reasons. One is that interest rates are very low these days, so they must find other ways to make money. Cryptocurrencies like Bitcoin can offer higher returns, but they also have a different behavior than other assets. They don't move in sync with the stock market or the economy, so they can help diversify a portfolio. Another reason is that buying and storing Bitcoin is easier now than before. There are services that take care of the security and access issues for the institutions. Also, some famous and respected people in the business world have come out and said they are investing in Bitcoin and they think it's a good idea. People like Paul Tudor Jones, Stan Druckenmiller, and Michael Saylor. They have a lot of influence and credibility, so when they say something, others listen and follow. But maybe the most important reason is that Bitcoin has a special feature that makes it attractive in these times. It has a limited supply of 21 million coins, and no one can change that. This means that Bitcoin is scarce and can't be inflated by printing more money. This is very different from fiat currencies, which are losing value because of the actions of the central banks. Smart money investors see Bitcoin as a way to protect their wealth from inflation and currency devaluation. Bitcoin is getting more attention and adoption from the smart money crowd. This shows that Bitcoin is growing up and becoming more mature as an asset. It also helps to make it more popular and accepted by the mainstream. If this trend continues, Bitcoin will become more established as a hedge against macroeconomic risks and a store of value for the long term. Despite volatility, Bitcoin's long-term price trend has been decisively upward, minting millionaires from early adopters. With growing adoption and a firmly established brand, Bitcoin appears poised to continue appreciating into the future. The wise thing to do is to watch how smart money is moving. Until next time, keep your investments smart and your future brighter.